Hi, welcome to Forex Trading Tutorial. In this video we're going to be looking at money management and how we can work out what lot size we need to use for our trading account. Now, as we can see, we have our open market execution thing, and what we have here is the volume, and that is in standard lots. So it gives us the ability to choose what lot size we wish to enter. Now, what we need to know is we need to know in what lot size is actually going to be reasonable for our trading account without us over trading and then increasing our real leverage and then blowing our trading account. Well, I've created some money management calculators, and if you just come to you just click on any of the Forex trading tutorial pages, there will be a Forex risk calculator page. All you need to do is click on money management and you'll get this page up here. Now what we have is standard lots, mini lots or micro lots. All Forex brokers work in standard lots. However, if you're trading Zulu Trade and doing signals, you may want to use the mini lots or micro lots. Zulu Trade comes into standard. Their default is mini lots. So I'm going to leave it on standard because we're actually working it out for our Forex broker. So what we would do is we can just enter in any trading account size, and this is our trading account size including any drawdowns that we have. So say for example we had a $10,000 account, but we already had one trade open and that was down by 500. We would use that figure to work out, we would just enter that in there and that would be our floating balance. But if it was our first trade, then we would use the full amount of 10,000. This second box here is the percentage we wish to risk per trade. Now, I would suggest that we risk no more than 5% per trade, in which case we could pop 5 in there, and that would tell us what our cash risk is per trade that we're willing to take. Now, the reason why I say keep 5% as the maximum risk is because that would give us 20 trades to be able to trade in our account. However, because we're going to be using money management, when we lose money, the amount of the size that we trade, the lot size that we trade decreases, therefore reducing our risk. In total, it just gives us about, if we were to lose trades in a row, it would give us about just over 100 trades that we could lose in a row before all our money was gone. So by doing it this way, we, rather than just having the standard 20 trades and we have a really bad run, we could lose most of our money, it keeps reducing our lot size down, which means that we keep protecting ourselves. On the other side of that though is that when we are making money and our account size increases, say for example with the 5,000, then obviously the cash risk per trade goes up. That then increases our thing, and that is how we compound our trades. And it's through that use of compounding that we then get our massive amounts of money. It's not through over leveraging our account with real leverage, it's through actually controlling it through the money management. Okay, so let's go back. Let's say we've got a $10,000 account and we wish to trade 5% of our account per trade. So what do we do next? Well, first of all, we need to work out what currency pair that we wish to trade. So in this case, well, let's say we're trading, let's go on this one, let's say we're trading the United States dollar, Canadian dollar. So all we do is we go to the drawdown menu, USD Canadian dollar is what we're looking for. There we go, click it there. And we need to find out what the current exchange rate is. There's two ways we can do that. One is we've got it here in the MetaTrader 4, which is 10, so it's 029, but it moves quite quickly. The other way that you can see it is if you go to your Forex trading tutorial thing, we can have here, and we just click on US dollars, and we've got US dollar, Canadian dollar, and that's where it is there. So 1.0294. So all we need to do is put in 1.0294 into our account currency, our exchange rate, Now this is next box is a little bit more confusing. What we're trying to do is we're trying to get this to convert it into our account currency. So if we're trading in US dollars, we would leave that at 1, because what we're saying is that the first part, which is called the base, to our account currency in dollars would be 1. So USD to USD is always parity 1. Same as Great British Pound to Great British Pound is 1, Euro to Euro is 1, and so on and so forth. However, say for example we were trading in euros, and that was our trading account. What we need to do is we just need to go back to here. So we want US USD, Euro USD, because we're converting US dollars, which is the base of our account, into euros. So in this case it would be 0.7698. So we'd go 0.7698, and then that would be what we need to put in there. Now the next thing we need to add in is we need to add in our stop loss. So if we remember, when we were deciding what we wanted to do when we were making our trade, we have to decide what stop loss we have. Now depending on the level of our stop loss depends on how large we can put our lot size. So if we've got quite a small stop loss, the larger the lot size. However, we do need to give our trade room to move. So in this example, let's say we're going to leave it at 250 pips. Now the lot size is always in pips, so it's how far do we want it to move. Say for example that's what we want to do. So okay, so what we're saying here is if we traded one standard lot of Euro USD, that would give us a total cash risk with a stop loss of 250 of 1,869. Now we've got here our total cash risk, and our total cash risk is 500, so this is far too large for our trading account. So we go to this box here. Now we're working in thousands, so what we're doing is, we're doing it in 1,000, 2,000, 3,000, 4,000, etc. So we know that 1,000, okay, so that's fine. So let's put in 10,000 and let's see where we go with that. Okay, that's still fine. So with a 10,000, it gives us 186. So let's go 30,000. So we're just over. So as you can see, what we're trying to do is we're trying to get our total cash amount lower than our total amount we want to risk. So let's say 27,000. Okay, just over. So 26,000 should do it. Yeah, there we go. So 26,000. So we know we've got a lot size here. It tells us what the lot size is. So we know if we're going to trade, we've got a $10,000 account. We wish to trade 5% of our account, and we wish to have a stop loss of 250 pips. Then the lot size to keep us within this risk is 0.26 for that trade. And it's basically as simple as that. All we need to do is plug in the details. All we would then do is go back to our trading system. We would then basically look to open a new order. We would say, okay, in this instance we wanted to trade 0.26. Just confirm that I was correct. Yeah, 0.26. We would put in 0.26, and then that would be our lot size. Obviously what we'd have to do is here put in a pending order. We could put our stop loss in, and then all we would make sure is that was 250 pips. So just to remember, the fifth digit is called a pipette, and that's 1/10 of a pip. So we would have to go 250 pips below that, and as we're looking here, so what we're looking at, it'll be 9175. 9175. So that would then make that 250 pips below the market. So that's how we would put it in. Our take profit, if we wanted to take profit, we could leave it, or we could just let it run manually, and you could choose to do it yourself. Obviously, to enter the stop losses, however, we need to put in a price, and that price must be at least 30 pips from the market price. So the idea we use this is we would look at support and resistance areas. So what we would do is we'd say, is it going to hold in a resistance? Is it going to break through? Is it going to hold? And then we can make our decision based on that, and then we can click it in. And what we're then doing is programming our order. Now what we've got here is a expiry date. And that's we need that because we can basically say, well, do we only want it for a short period of time? Do we want it to last a week? It all depends on what time frame you're trading as well. If you're trading in days, you may want to open for a couple of weeks. If you're trading in minutes, you may only want to open for an hour or so. So it's purely up to you. And as soon as we've got that ready, we will just click on place, and then that will place our order. When the market reached our at price, it would then make a buy. If we wanted to do a sell, we would just do it as a sell. So that's basically the way we would do that. So going back to here again, all it is very, very simple. If we're just using all we're doing is choosing our stop loss, choosing what lot size we wish to take. If we're doing lots of small trades and we're doing lots of high frequency trading, probably better off just reducing our cash trade down to something like 2, because we're not going to be using a stop loss of 250. We might only be taking a 50, if you see what I mean. So basically what we can then do is, as you can see, that's going to go up to 52,000. So there you go. So if we were going to do a shorter time frame, we could probably say we only want a 50 pip stop loss, and in that 50 pip stop loss, then our lot size may well be half a standard lot. Obviously that would mean that we make more money, but obviously we want to protect ourselves, because obviously when we reduce our stop loss, we increase our lot size. So in this case, we may even want it to go as 1% per trade, because we're trading very, very frequently. Because we're trading very frequently, that would take it back to about 26. And as you can see, if we were trading 26, we could use a 50 stop loss. So for example, if I close that, put that onto the M1. So when we're looking here, so what we're looking at is basically 4.5, so 27.2945. So because we would go 50, so basically we'd be having a stop loss around about here. So if, for example, we thought that this was going to be a support and resistance line, so let me just draw that in for you. Right, I want a line, I want a horizontal line. So say, for example, we thought that was going to be the support and resistance line. If the market came down to here, we could put a pending order that when it came down to here, we'd want to buy, and we want to put a stop loss which was 50 points below the market, and then we wanted to do it at 0.26 standard lots, and then we would be trading, and I'll just show you, we would be trading 1% of our trading account. So that would mean that we're taking very low risk, but also gives us the ability to put the fine tune our thing. But when we're trading quite high frequency, then it's just something to consider. A couple of other things on the calculators for us. We have a risk of ruin calculator. Now, for those of us that have worked out our a win-loss ratio, and if we have a win-loss ratio greater than 1 to 1, so larger than 1, we can use this calculator. And all we do with that, we just pop in what our account size is. Say we're winning we're going to trade 5%. Our win is 87, our loss is 13. And then what it would do is it would give us the percentage of our risk, a percentage chance of going bust. Now you have to remember that our win-loss ratio has to be greater than parity for this calculator to work. But what it then does is it just shows you that we're not over trading. So it's a very simple calculator. The other calculator we have here is the margin calculator. Now for the margin calculator, what we can do with this is it just tells us the maximum number of trades we should have open at any single time. And we just take the information from the money management. So in this case, we've got a lot size of 0.26. So we'll just we just want to put that exchange rate in. So it's 0. We'll just copy that over. Lot size 0.26. Standard lots. Now what we have here is the ability to put our leverage in. So whatever the broker leverage that you've got, that's the leverage that's offered by your broker. Say for example we want to only open maximum number of trades 8. We're going to risk, in this case we were risking 1%, our account size was 10,000, and and our account size is traded, and let's say we are trading 1%, and we're only trading 100% of USD Canadian dollar. What we would do is, obviously, if you keep track of your different currency pairs that you're trading, so you could try a different Excel spreadsheet for each one, or you could just label which one it is. The reason for that is you just to use this calculator, you just need to know what your percentages are, because obviously it's going to work it out where the market is today. And all that would happen is you just go down to the bottom here, and all it would say is that we've got a total margin risk of 1,120, and our account size is 10,000, so we know that we're taking a very low risk. If, for example, we put that up to 5, as you can see, and then if we said we were going to open 30 trades at once, what you can see there is our account size is 10,000, but our total margin risk is 16,000. That means that if all 30 trades were open at once and the market turned against us, it wouldn't have to go to our stop losses before we had blown our trading accounts. So it's just a very easy way of just checking to see whether or not, so if you had it back down to 8, you'd only have a 4,000. So you know that you can kind of gauge with your trading system what's the maximum amount of trades you should have open at any one time. I wouldn't go kind of like to the maximum of your 10,000, but it is just there if you want to kind of play around with it. It's very simple. If you want a more in-depth idea of how to use it, I go ahead and have a look at the signals version of this. It just explains how you fill it in more details and where you get the information from. With the signals stuff, it's to do with systems pages that I created, so I'll put an example one on this website. But for manual traders, you'll just have to piece the information together, but it's there just to kind of give you an overview of where you should keep your level of your trading. So as long as you are using your money management to select your lot size, and also you're recording the information, that gives you the best chance you can while you're manual trading. Okay, so that is manual trading, and I'll speak to you in another video.